So first chart we're going to take a look at is obviously gold this morning. Now, what I would say, obviously, because the markets are into more volatile space, okay, what I like to do when the markets are volatile is I like to get a little bit of a long-term chart up or a bigger time frame. Now, you can see this is obviously a weekly profile, and what I want to show you is that obviously gold opened in value yesterday and got straight out of it. Now, straight away, what I'm looking at is this little hole here, this little cave, and this is also why I'm technically quite bullish gold at these levels. Okay, so keep an eye on this. There's a lot of unfinished business here. We are near last week's lows. Any kind of a little bit of a failed extension on the current morning low, I will be looking to pick up that gold as soon as it comes back. So if we sell through the 37.4s and we come back above those 37.4s, maybe a close on the half hour, I'm looking to target not just a midpoint trade, but at least all the way up until that 113 or 1346 area. So good short-term trade in the gold this morning. Nice $10 bounce. Keep an eye on that trade. It looks particularly good. And note the lack of sort of fill out here. This profile really does need some filling out. Now, if we go across obviously to the half hour, I just want to show you the half hour chart. So again, note we broke that trend line yesterday, a little bit of a short-term trend line. It did hold 4 separate days. It broke yesterday, but note this, guys, and this is always key. Okay, we came back, tested it, but it didn't really offer us anything, so we get rid of that. Okay, don't just keep noise on your charts for no good reason. Now, what I do want to point out is a strategy we're seeing in both oil as well as gold, and I want to show you this technical strategy. So what you can see back on the 4th and 8th of Jan is we can see not necessarily a resistance, okay, but an area where the market was respecting. So we saw some sort of a response in and around that 1332, 1333 area. Okay, we can see two swift rejections off there. Eventually we got above it, we saw the acceleration to the upside, came back, and again, not necessarily tested the exact area, but held, okay, couldn't get below that 1330 area, again tested it before springboarding, okay, so for me, very, very key, very early on, we want to pay attention to this 1332, 1333 area, what it means for us, that's what we want to pay attention to, so keep an eye on that area today. It does coincide, as I said, if I get that profile back up, it does coincide with pretty much around last week's low. So keep an eye on that 1333 area, as well as obviously any kind of a failed break below the current morning low. That being said, let's move on to the oil. Again, oil also, it's one of those markets we have to zoom out. Why? Because we've got these very wide ranges. Okay, so again, we can see oil a little bit different to the gold in the sense that we are still stuck in last week's value area. So, oil is still quite well bid, but we are seeing this process of profit taking. So again, keep an eye on that. Keep with the process of profit taking. Don't be afraid. The markets are very well balanced in terms of gold and oil. Don't be afraid to try and take on a little bit of a balance trade, maybe a purchase at 64.34, which is the current weekly value area low. Okay, that being said, you can see there's a real hesitancy for me to come out and say, I'm outright short oil, outright short or long gold. Okay, it's more a case of, you have an idea, you have an approach, the markets are balanced, you try and get the timing right in that approach and execute accordingly. Okay, as you can see, that is the oil chart. Nice strong sell-off in the Asian hours, obviously yesterday morning. And again, note what we've seen. Notice the sell-off coming in the Asian hours. Okay, that's always key to pay attention to, because what we saw again in the S&Ps was we saw very strong weakness in, not the S&P, sorry, we saw a lot of weakness in the US Treasury yields yesterday morning and again this morning. So, if that's the theme, you might want to be getting up a little bit earlier to take advantage of some of these flowing moves. Okay. So that is the oil. Now, what I want to point out to you where there's a similarity between gold and oil is note here. Okay, so as I showed you in the gold, we had that what we called minor resistance area that turned support. Yeah, we have it in the oil. Okay, so note 64.83 resistance. Okay, eventually popped and extended. Came back, used it as support. Came back, used it as support. And guess where the market is now currently trading? Around that 64.83. Okay, now when the markets do approach these areas, they become quite tricky, right? Because a lot of the time, in order for a market to break through support or resistance, it has to go through a phase of what we call acceptance. Okay, so we could see the oil really spending a lot of time in and around this area, trading on both sides before potentially move up or potentially move down. Okay, keep an eye on that over the course of the session.